everyone. Thank you for joining us on our first episode of the Pain Podcast. We're still working on the name, but it's going to be, we're in the process of what I would consider to be a mini bear market. So I feel the name is fitting. And we're joined by the very gracious Alexandre Laizet. Did I get that? I hope I got that right. Director of Bitcoin Strategy at Capital B. And I believe it's Europe's first Bitcoin Treasury company.
Exactly. Very nice to be here with you today. Thank you for the invitation.
Thank you for joining. Nowadays people are disappearing. Let's put it that way. A lot of people are disappearing. So the few that are actually showing up, I think that says a lot about them. It hasn't been an easy market. The first half of the year was obviously very productive. The second half has been a little bit on the rough side. But I guess if you can give just a brief introduction, I think a lot of people are going to watch this. They're already in the Bitcoin Treasury company space, but it doesn't hurt to give a little brief introduction, your background, and how you got into Capital B.
Sure. Well, thank you so much. I love the initiative, the proof of pain. In life, you have to embrace pain because that is the source of all energies and innovations. That is how you realize that there are things that you need to at least analyze, consider, and move forward with that new type of information and potentially even some changes and evolutions. So, as you said, the default scenario when you experience pain is to keep working, and it's to keep waking up and to still showing up at the right time and to maximize the proof of work that you can provide in that respect. It's also a time to reflect, of course. On my side, I'm Alexandre Laizet. I'm a board director of Bitcoin strategy at Capital B. And as you mentioned, Capital B is Europe's first Bitcoin treasury company. We started back in November 2024, and it was actually the third one in the world after Strategy in the US, Metaplanet in Japan. Capital B impulsed that movement over in Europe, and we've been well known for being fully focused on maximizing BTC yield, the increase of Bitcoin per share. I am personally a Bitcoin maximalist. I work for Bitcoin. I am dedicated to contributing to Bitcoin overall, Bitcoin adoption, and Bitcoin education, and the integration of Bitcoin into the traditional world, and the bridge that we can make with the experience I had and my partners in that adventure and all of our shareholders is to bridge Bitcoin with the traditional financial system, and over time have a sounder and a more based financial system and economy based on solid foundations of Bitcoin, which I believe it's a great benefit to the world, and as well with this contribute to the overall adoption of Bitcoin with all of our counterparts. And before that, I used to be digital assets lead at Accenture. I used to work with 30 plus financial institutions over the world for the adoption of Bitcoin. And before that, I used to be senior economist at EY. Those two organizations are among the top, the biggest consulting firms in tech and audit in the world. Used to work with half of the corporate CAC 40 companies in France, listed in the stock market for their treasury. And all of these experiences, together with the Bitcoin passion I developed during COVID, as the solution for financial sovereignty and individual freedom, is definitely the thing that I've decided to dedicate my life for. And the Bitcoin Treasury company with Capital B that we have created is really this objective to work for Bitcoin in the best way and to maximize these benefits for our shareholders.
It's I don't know your age, but it seems that you're a pretty young man, so that's a pretty impressive resume. I'm glad that you found a passion at that young age.
I'm 32, and the most
Okay.
important aspect I didn't mention is to have faith. and to build solid foundations for yourself. And
Yeah.
Bitcoin is definitely that aspect in the economic world as the perfect money, but faith is of utmost importance, I should say.
Yeah, I agree. Can you, I've always been curious what it is to be one of the top people in one of the top Bitcoin treasury companies. So can you take me through a day in your life? Like morning, I assume you take your espresso and
Well,
then you
first
proceed
of
on your
all,
day. Could you give us a,
the top people are the people you don't see. It's Satoshi Nakamoto, Adam Back, and Hal Finney, and all the founding fathers of Bitcoin. In my
right?
view, those are the top people that I thank every day. So I take my espresso and I thank very much Satoshi. Alfine, Adam, and everyone else that has contributed every day. In fact, that's part of the prayers that you can make as well. So, um, but to your question, the routine is sport in the morning. Is for example swimming. It's coffee, that's for sure. A pain au chocolat, which is French specialty anywhere in the world, by the way. I cannot miss that piece. And or eggs where there is no pain au chocolat. And then after it's pure work for typically 12 hours straight,
Wow.
from of course meetings with investors, meetings with the team, and the deep work to work on the strategy for the multi-year ambition that we have, and how that translates to the day to day, and what we need to do to build the right machine based on, yes, what we have done, yes, the inputs from the market in the past and in the present, yes, the of course advice that we can get from a lot of market participants and people that have a lot of experience in markets and in Bitcoin, and in international aspects of the expansion of the business. But how to translate that into concrete actions for us, for the team, and of course, in terms of how I allocate my time and energy in the best way. And typically, that includes as well some reflection time. I spend typically 1 to 2 hours a day reading or listening to some of the best thinkers in the space, and collecting that information with the objective always to maximize the BTC yield. You can do a lot of things in life, but you can specifically do one thing very well, and that's my focus, is to be able to do one thing very well. And it's of course hard, and that's why you have the proof of pain and proof of work.
Mm, yeah.
But you need that focus to transform pain into results for your shareholders.
Absolutely. You discovered Bitcoin in 2020, correct? During
Exactly,
COVID?
during COVID, exactly.
Yeah, that's when you
So
went through all the research. Was it something that really that the spark hit you right away, or was it like a slow creep? Did it was it something
it was
that took you a couple of days or a couple of weeks?
yeah. So that's the purest example for me of pain, is to realize that the whole world that's been presented to you is different if you start thinking for yourself. And
That's true.
when you end up locked up in a room of 9 meters with your wife because you cannot go out of your apartment in Paris, where you are working 24/7 on your fiat job. And by the way, I loved the job. Huh? It was working with some of the major corporations in my country,
Yeah.
and working with topics that I loved already in finance. But the economics of that transaction, of my time and energy allocated to money, to a bill that can be printed out of nowhere from a central entity, at the same time that that same central entity has the right to lock you up in a specific space, that was completely unacceptable. And that was against the core values that I had through the education that I received. And the education I received is to, in case of pain, you do not let yourself fall down. You go up, and you go up with the force that is needed to make that a success. So, in that respect, I found the solution as fast and as hard as I could, and I found Bitcoin very quickly. And that was because I used to learn about it in 2017. But at the time, one, I think I didn't really need it from where I was. I didn't have I didn't have money. So when you don't have money, then yes, you could buy Bitcoin, but with what, you know? So in
Yeah.
that respect, I had the money. I was not locked up in an apartment. I didn't have the money. I was not locked up in an apartment. I didn't have a fiat job working 24/7 for the right to have later on not a 9 meters but a 30 meters in Paris with 3 kids, and that was not working, you know. So then 2020 was the materialization of my values at the core, and the difficulty of the situation. And then when I found the solution, I actually realized, oh, actually, it's not really that the system is bad. It's not actually that the situation is bad. It's that my thinking of the situation and how to take uh, advantage of that situation is bad. And so when you realize that instead of complaining, you can just do things with your life, then everything changes. Your mind goes to full abundance, and you focus on just building things. And building things takes a lot of time. It takes, well, literally, it took 5 years from that moment to a Bitcoin treasury company. So it takes time in the process, because I decided, okay, I will now spend all of my time and energy towards Bitcoin. And so I started first as changing towards the analysis of Bitcoin from a technology standpoint. I learned to code and to analyze the Bitcoin blockchain data to understand it by myself. And
Wow.
then I applied that from the machine learning perspective with AI tools. And then I shifted within my existing company to go towards AI applications, but I discovered that what I liked was the financial and the Bitcoin aspect, of course, that I wanted to contribute to. So I shifted towards contributing to Bitcoin institutional adoption within Accenture with the largest banks by advising them from a financial and Bitcoin perspective on how to adopt capabilities that would allow them to custody Bitcoin and to offer Bitcoin services to their retail and institutional clientele. And some of those banks have already started to launch those products. So
Okay.
I'm glad to
I was
have.
gonna say, how did they were they receptive at the time?
There was a before and after BlackRock. So the
Oh
ETFs
yeah.
were extremely important for this, and the BlackRock CEO statement, Larry Fink, was extremely foundational for a lot of those banks. They decided to go live, at least to go live with the projects after that decision. They were exploring it before, but in fact, they were not having that top management level confirmation that yes, we will do it. So before January 2024, the institutions were exploring the range of possibilities, or they were testing things. But after January 2024, they decided to launch those pilot programs and serve specific clients and build those capabilities. And it's a multi-million dollar and tens of millions of dollars in terms of cost for them. So as a bank that is not that solvent for the joke,
Yeah.
but that's quite important as an investment. And so you need to be careful that you build capabilities for the future. And then when you have the largest asset managers in the US that say, yes, we want to go ahead with this, then everyone turns around. And so then a few banks have already acted on this advice that I contributed to, especially in France and some in the US. And with the team, I'm glad of what we've done. But then I got contacted by Capital B, and we launched the Bitcoin Treasury company together.
And it's been a new adventure ever since. Um, so that's a great background. Okay, so let's see if we can start getting into some of these some of these questions because um, obviously Bitcoin Treasury investors are in line with Bitcoin. So I think everybody agrees on the thesis that everybody wants to use. A company, a public company, you can issue these elastic securities for something that is inelastic, that's scarce. That is the play. That is the thesis. That's been the thesis for the strategy now thesis for since 2020. Um, so given how many, I think this year alone, I think we're over 4 million Bitcoin acquired by treasury companies or just institutions at large. Two things that come to mind is number one, how, given so much demand and volume, what's your perspective on the price, on Bitcoin's price dipping? And number two, what Bitcoin Treasury space itself has been hit the hardest? Is it just a derivative effect of Bitcoin's price, or is it something bigger in your eyes?
So I had a conversation with a major sovereign wealth fund recently, and one of their best traders mentioned that basically his analysis is that people don't take Bitcoin seriously yet. So you think that you can sell Bitcoin and get away with it later down the line. You think that you can time the market. You think that you can establish trading strategies to arbitrage some market movements of Bitcoin. Yes, you can. Whether you will outperform Bitcoin over time is another question. 99% of participants don't. Doesn't mean it's impossible, but in fact, what is happening is effectively market participants, some of them at least, do not take Bitcoin seriously. And so when you don't take Bitcoin seriously,
Do
over
you,
time,
I'm sorry to interrupt, but are you referring to retail or are you referring to the actual institutions and some of the bigger players?
this comment does not identify a specific player. When I say people, I say when you say overall the market price action of Bitcoin has been a bit down this year, is that net of the different flows, the price has gone a bit down. So that means that overall, the majority of the population, and even 90 plus percent of the population, 95%, I would even say 99% of the population does not take Bitcoin seriously. Because if you take Bitcoin seriously, the rational thing to do is to keep accumulating it as the standard store value and not trying to play around with some volatility gains and some strategies to trade it. And in many aspects, trading such an asset is a sign that the actual comprehension of that asset, unless unless the it is about a professional trader whose activity is to do so and to generate a cash flow out of it, that can be understood. But in fact, when you understand Bitcoin, the rational decision is to accumulate the most of it and to start looking at ways to accumulate much more of it with different tools. And so that's how the Bitcoin Treasury Company emerged, of course. But to your question, the aspects that have potentially played into the downward pressure on Bitcoin that we have seen this year, at least the sideways pressure on Bitcoin, is likely that we have not even seen the bull market yet, because we are looking at Bitcoin in a way that is priced in dollars, in euros, in a currency that is being printed. And so what we only see is a price action of Bitcoin that adjusts for the inflation of the state currency. But in fact, when you compare that to gold, you observe that Bitcoin has not really reached all-time highs against gold, and Bitcoin typically in history takes it's not science, but typically in history has taken 6 to 12 months after a top of gold was materialized for Bitcoin to reach new all-time highs. And again, when we talk about all-time highs, that is not in and of itself an objective or something to look out for. Michael Saylor is known for saying that they will buy the top forever. And in fact, it comes down to a discussion I had recently with the president of a very large bank in France, is what is actually the justification for the price of Bitcoin, and why should I buy now while people have bought it at 10,000 and 30,000? Am I not, buying too late? And what will be the price in 1 year? And at the end of the day, what is the fair price of Bitcoin? And so what I guided him through is that there is a reason why me and more Bitcoin maximalists around the world, at least all of them, if you are a Bitcoin maximalist, um, uh, believe that or are indifferent to the price of Bitcoin when they buy it. Completely indifferent.
Yeah.
Because what is the question is, what is the price of individual sovereignty? What is the price of freedom? Well, it is completely priceless. So you do not care about the short term fluctuations of the purchasing power of the asset. What matters is to make sure that whatever you do, you are protecting yourself from short-term fluctuations, and you are not subject to short-term fluctuations. But in fact, what really matters is how many units of Bitcoin you are accumulating, because Bitcoin is really repricing the world. And as the world discovers Bitcoin, it is extremely volatile. And that there we come to the second factor, I think, of Bitcoin fluctuation this year, is that Bitcoin is literally infiltrating Wall Street. And as Bitcoin is infiltrating Wall Street, well, Wall Street is doing Wall Street things with this new asset. And you discover that there are market players that have substantial impact on the price of things in the short term, and that will inevitably, as this is the king of the theory of the game theory, is really that you have Bitcoin that is replacing the world, and over time the players that are short Bitcoin get obliterated. So
Yeah.
the thing is, this is required, this type of volatility and uncertainty and doubt is required for this new asset to enter into this new world of traditional finance. And as we enter this new world, you may have different things that will happen, and you will have uncertainty and doubt that will come from institutions thinking that strategy is too leveraged, where in fact it is less leverage than the traditional companies, and diffusing some information in that respect. And you will have doubts about the security of Bitcoin in terms of the quantum aspect. And so then all of the questions at the end come back to whether Bitcoin is secure and decentralized. And if Bitcoin is the most secure and decentralized cryptographic network, then the 21 million unit is absorbing the value of other assets in the world that flow into Bitcoin, because they are less secure and less decentralized, and therefore less trust is given to them as a monetary asset. And the most trust goes to the most secure and decentralized network that guarantees a fixed supply. So there is no other asset on earth that is more secure and decentralized than Bitcoin. And there is no other asset on earth that has an absolute fixed supply with global adoption.
I completely agree with you. There's some other, so you bring up really good points. Some additional points that I would say for Bitcoin's price action has been just macro in general, and just things that are, I mean, you can't really control. Nobody really saw. I mean, some people heard the tariff narrative coming in, but that really threw the markets all over the place. Then there was Liberation Day or Liberation Week, which is very similar. Then there was the shutdown. There's been multiple things that have been going on that, on top of what you mentioned, just cranked it up a notch. And that's Bitcoin itself. And honestly, I think that given all of the price action and 100,000 being such a, in my opinion, it's such a level that people, it's such a psychological level. It's a tough one, but I think once we confidently breach it, I think it's just upside from there. How long it'll take, who knows? But that's Bitcoin itself. Obviously, Bitcoin Treasury companies are derivatives of Bitcoin itself. So we're going to see much more upside on the good side, on the good times, much more downside on the bad times. Bitcoin Treasury companies were actually underperforming Bitcoin mid-year when Bitcoin was going higher. A lot of Bitcoin Treasury companies, Metaplanet, everyone really were suffering. Do you think it's because too many Treasury companies came in at the same time and kind of there was just too much supply? Do you think it's something inherently wrong with the flywheel, the original thesis of the flywheel, which strategy started off with dilution slash using operating profits to acquire more convertible bonds. So that original flywheel, is that still valid? Is that still good? Or has it broken? And do the preferreds make it better? Or do they just highlight more of the flywheel not being as effective?
There are a few things there. So first of all, I think something that is useful for Bitcoin itself is that for people that were not there in the past cycles of Bitcoin price moving, crashing to 80K is quite a statement when you crashed 4 years down the line before from 60 to 15, and
Yeah.
then now you crash at 80. So I guess that tells you about the importance of the time horizon, and the importance to at least have a window of time that matches the time that Bitcoin needs to get into the hands of new market participants in a way that necessarily creates frictions when it happens. So that is, I think, a natural market result. And then there is a deception that there would be a major blow off top in 2025. And I would like to say again, if you really understand Bitcoin at the core, you should be happy that Bitcoin is cheaper, because its value is the same and you get it at a lower price. So that is a major thing to keep in mind. Then second, on the Bitcoin Treasury company side, well, I would like to mention that capital B is up by 170% year to date, while Bitcoin is down by 2-3%. And over 1 month, yes, capital B is down 5%, but Bitcoin has been down by 15. So you see that, in fact, it is not necessarily true that when Bitcoin goes down, there is an amplification on the Bitcoin treasury company side to the downside in a sufficiently long time horizon. Then you can pick the time horizon and take the top of the last share price of a company and say that yes, it has underperformed, which is definitely correct. At the same time, this is a 3 to 5 months time horizon. So yes, it is necessarily there that a Bitcoin treasury company which has a share and a premium will definitely create a form of premium that will, in a bull market, provide outsized opportunity, and in the start and process of a bear market, create additional risk that you don't have with Bitcoin itself. So that is a true statement. On your question related to the competition, I think it is definitely a reality that you have had a period where you have the same or equivalent demand with 10x or 20x the offer in the market in terms of new types of Bitcoin treasury companies. And there I would say that, again, that has been a very important step that has happened over the last 5 months, is a form of return to quality. In that respect, Capital B has been the only major Bitcoin treasury company to date to maintain a premium in the market. And that is mainly observable, I believe, through the quality of the capitalization table of Capital B. To be clearer, it is mainly due to the strength of our shareholder, which are of the most long-term oriented Bitcoin maximalists in the world. That includes Adam Back, that includes Fulgor Ventures, that includes Tobam, the French asset manager that's been leading in Bitcoin since 2017, and that includes UTXO management, and that includes all of our individual investor base, which is the fourth in terms of number and participation in the world in the Bitcoin treasury company space. And I've got some number from one of the largest brokers in France, and actually I've got data that there is about 1 billion of volumes from individual investors since the start of the year, and that is quite significant for a listed company in France. And that is one of the reasons why brokers are definitely interested to work with us as well. And individual investors have been overall buying and buying and buying the share since July and August. The issue, I think, in terms of the share price performance of Bitcoin treasury companies over the summer has been more from institutions that typically, you think that a rational time horizon in Bitcoin is 5+ years and that the right one is forever. You think that if you don't have that time horizon, at least 1 to 3 years would be at least quite reasonable. But in fact, I got mentioned by a broker that most of their institutional clients, they have a time horizon of 1 month. 1 month. So effectively, what it says is that institutions are typically buying when it goes up and typically selling when it goes down. And so you get a form of short-term amplification on both sides by institutions, and you love it when it goes up, and you are a bit, of course, bothered when it goes down. but that is also what provides the energy and the volatility and the vitality in the market. And that is what provides for the same value a cheaper price in a period where the share price have been going in a downward price movement. So in
Yeah.
reality, for individual investors and as well over time for institutions, volatility is opportunity.
Are you personally disappointed in the performance of Bitcoin and the Treasury company space in 2025? Did you expect 2025 to be just a resounding home run, as we say here in the US? What's 2025 been for you personally?
Uh, in investment circles from some of the largest investors I've met, all investors were expecting a much higher price movement towards the end of 2025 and early 2026. So that has created some deception and, in fact, some liquidity available in the market that was probably going to happen in terms of new types of investments by end of 2025 will likely have to be at a later stage for those types of investors that are, for many of them, fully allocated to Bitcoin and that are typically in a much better position to allocate sizable positions when the market starts to move back again towards the upside. And so, something that I didn't know before and that I've come to appreciate is that it's not that investors necessarily, want to buy when it goes up. It's more that investors are typically more in a liquid position when things go up in general in the market and they can allocate more. And so, then if Bitcoin doesn't perform and stays flat for 1 year, you have some deception, and then the market has to adapt to that new reality. And over time, Bitcoin wakes up again, and we've seen in days you can go up by 10-15%, and everyone
Yeah.
gets excited again, and it's
Yeah.
Bitcoin doing Bitcoin things. So
So do you think that the flywheel, going back to that original question, do you think flywheel, the mechanics of the flywheel, as originally implemented by strategy and yourself and Metaplanet, do you think that's still intact? That's still good? It's just a matter of Bitcoin in the market just participating?
So the flywheel has evolved. It's not that it's working or not. The elements that were already there in the market in terms of issuing equity at premiums and issuing convertible notes, for example, those still work. It's just that they typically work even more in other types of market setups where there is more of a bull market. And so when you have a more downward price action, you see companies looking at new types of capital raising capacity. The most successful one is definitely the one that provides the less dilution. And so the preferreds issued by strategy have been putting a strong example in the market into what a Bitcoin treasury company can do to maximize Bitcoin per share with a non-dilutive instrument that has a perpetual time horizon, which is very fit with Bitcoin time horizon as well. And for smaller companies like ourselves that are in a leading, consolidating their leading position in a region, then you have other types of tools as well that you can develop, like the type of instruments that are denominated in Bitcoin that can provide with an outsized risk return profile for investors and a great timing for the company to grow its Bitcoin balance sheet and reach the levels which are from, we are today at about 2,823 BTC. And we know that towards 5,000 to 7,000 BTC, we already have a lot of interest from institutions into new types of offerings. And so, in that respect, we are planning for those steps carefully. We have proposals every week on the table that are financings that are not adequate for Bitcoin treasury company, but we focus on the ones that can provide both a maximization of the increase in size of the balance sheet and as well provide the capacity to do the next operation that can also maximize Bitcoin per share. So it's not that the flywheel is broken, is that the flywheel is one flywheel on one side, which is during a more market that is going up, and another flywheel that some companies have already started to put on, like strategy with the preferred, Metaplanet, Strive, and Capital B with the Bitcoin convertible notes that we have issued since March 2025. We were the second issuer of Bitcoin-backed credit in the world. And so we've been issuing those quite a few times. Then the question is, why not issuing one right now? And I can tell you that we are definitely, of course, focused on those types of potential issuances, together with other strategic initiatives that can include a lot of different things that I cannot really mention in detail.
No, I understand. One flywheel is on the upside, but the second flywheel, which would be like STRC with strategy. I am assuming you're thinking about something similar, but it might be too soon, or maybe you need more Bitcoin on your treasury to be able to deploy that strategy. So the
So
preferreds and for capital B.
yeah, it depends. You could do it now. At the same time, you have to balance different types of opportunities and how they will interact with between each other and with which type of timing for the launch of such products. And it needs to be fitted with your own regional regulations and your own balance sheet priority. And so in that respect, we have opportunities that can allow Capital B to increase significantly the size of its balance sheet. And we also have opportunities to maximize Bitcoin per share in a way that minimizes dilution over time. And those two types of opportunities are run in parallel, and those exist in France, in Europe in general, and they also exist for us. We are in the process of creating a subsidiary in Abu Dhabi as well that can also provide major opportunities. And so you have different types of investors and different types of growth opportunities for the balance sheet and for creating new types of flywheels for the Bitcoin treasury company. And so our focus in a market that's been quite tough is to build the foundations to make sure that we have everything in place at the right time that can really accelerate the growth trajectory of both the balance sheet and the BTC yield generation capacity. That's a bit, of course, too vague for any investor because you would want to get into more specifics. At the same time, of course, that's the role of the Bitcoin treasury company, is to work on the background on strategic initiatives that can transform the type of velocity and trajectory and size and leadership of a company. And our full objective is to continue to consolidate Capital B leadership over in Europe for the issuance, yes, of digital equity and as well, as you mentioned, of digital credit.
Yeah, that absolutely makes sense. Your Bitcoin denominated bonds, for those that aren't too familiar with those, it's a brilliant solution. I don't know if I think you said you were the second to have that, or maybe the first. I know that Smarter Web has something similar with Smarter Converts. Are they the same, or is there a difference? And if there is a difference, can you explain it? And can you also explain briefly the positives and the negatives of this type of bond versus a traditional convertible bond?
Yeah. So I mentioned we were the second issuer of digital credit, meaning Bitcoin-backed credit. The first one has been Strategy with the preferred at the time. And just after, we have launched for the first time, it was the first one in the world for Bitcoin treasury companies, and we created it it was an innovation that we brought to the Bitcoin Treasury company space, is a BTC denominated convertible bond that is issued by a bankruptcy remote SPV that we fully own out of Luxembourg, that is able to provide for the investor downside protection in Bitcoin without having a secured convertible note. It's an unsecured, but the Bitcoin sits within a wholly owned SPV in Luxembourg, which is a very high form of protection. And on the other side, a maximization of the BTC yield generation capacity of the company, because that is an instrument that is issued at a 30% premium in and of itself, on top of the existing market premium that can exist in the market. And that is over a 5-year time horizon. So it doesn't add credit risk to the company because it is BTC denominated, and we have Bitcoin on one side and Bitcoin on the other. It can also be subscribed directly in Bitcoin. So we completely skipped fiat. We didn't even use fiat for the transaction. And on top of that, it allows for the company a sufficiently long time horizon to outperform Bitcoin and convert that instrument from debt into shares of the company at a specified price. And the condition for the conversion is that capital B share should perform by plus 70%. And so in that respect, capital B is able to convert the convertible note denominated in Bitcoin if the share price of capital B exceeds the strike price that is at 30% at the premium at the time of the transaction that is happening. So when you purchase,
are these bonds at risk at this moment, or not really?
no. So okay.
No, not
So
price or time.
today, 80% of the BTC denominated convertible notes that Capital B has issued are already converted or in the money, which means that they could be converted over the 5-year time horizon under the current conditions, because the share price has already gone up to a level which exceeds the strike price that was determined at the time of the signature of the convertible note deal. And so in that respect, if Bitcoin itself continues to grow by 20-30% CAGR every year, this in and of itself could allow the company to convert. But even without this, even in current conditions, 80% of the notes that we have issued are already converted or in the money. And so that is quite different from the one that were issued 3 to 5 months after by Smarter Web. Smarter Web has taken inspiration from that structure, but in turn has made a maturity of 1 year. So that is not something that Capital B has done. We have focused on more long-term instruments. A Bitcoin treasury company has the flexibility to do lower maturities. And in fact, depending on Bitcoin condition, Smarter Web could very well be in a position to convert. At the same time, we have to date refused lower maturities. And that is mainly due to the fact that there are some Bitcoin cycles, and I don't want to be looking at the price of Bitcoin every day. And so that gives both the time to Bitcoin itself to do the work and to the Bitcoin treasury company to do the work to maximize Bitcoin per share. And the outperformance can come either from one of those. And so in that respect, the risk is minimal for both parties, and the upside is extremely high because it provides a maximization of your BTC yield with a Bitcoin-based investment, with a Bitcoin-aligned investor that is a Bitcoin maximalist, which is not shorting the stock on the other side, as traditional bondholders typically do. And so in that respect, It is aligning the interests of investors and the company, and aligning the time of Bitcoin with the time of the Bitcoin Treasury company. And that's been, frankly, one of the most exciting innovations
Yeah,
in
I
the
agree.
Bitcoin Treasury company space.
I completely agree with you. I think the structure of that convertible bond, Bitcoin denominated bond, is it's great. The one you hit it on the nail. Like the one worry that I have with any kind of debt is just short term, just the low time durations. Those, I mean, we're seeing it now.
Um, if you take a step back and analyze what we are really doing, uh, this model is not new. It has already been done in the past, as you know, I guess, in the 17th, 18th century, 19th century. There were two companies, private companies, that were created in England and in France, with the goal, with the 100 richest families in both countries, to accumulate gold. And those two companies were going to accumulate gold by issuing securities. And those two companies became the Bank of England and the Banque de France.
Hmm.
And so this is a powerful value generation capacity for a balance sheet that is able to accumulate the scarcest asset on earth at its time. And that is what a Bitcoin treasury company is doing. And in fact, what we are building is not a bank, is not a central bank, but it's a form of central bank for digital capital markets. And in that vision, it can make sense to have different types of maturities that a central bank, a form of central bank, is able to have, to provide different types of liabilities and different types of maturities to different types of investors, and maximize either Bitcoin per share uh, to the full extent, because you keep the Bitcoin and you keep the premium for the conversion of the share, or in any case, you could keep still a premium that the investor has paid upfront. And yes, you innovate on your liability side, which can be also understandable. So I'm not saying this should not be done. I'm saying to date, that is the time horizon where we have felt comfortable with, given the stage of development that the company has had. But over time, the role and significance of a Bitcoin treasury company may imply new types of products and services that the company may explore. So I think that Smarter Web has done quite an impressive job over the UK. I really respect Andrew and Jesse, and I very much encourage, innovations in the space. It's not been the type of innovation that we have followed in terms of maturity, but I would respect that choice on their side, and I would wish for that bet that they made to end up very well for their shareholders. So.
You mentioned having capital B still having a premium on top of your NAV, so the famous mNAV. I guess two questions. Question number one is, what do you think is a fair mNAV? What's a fair premium for a company like yours? I've heard a lot of people say that essentially Bitcoin treasury company should deserve a one mNAV because you're essentially a glorified ETF. I disagree with that. I don't think that's what it is because you have all these tools that you can develop, and Michael Saylor has said it very nicely. You say it very well. So I don't think a one mNAV makes any sense. Less than a one mNAV makes no sense unless you're in trouble. I guess question number one, what do you feel is a fair mNAV for a Bitcoin treasury company that's responsible, that's doing things the right way? And do you see, as question number two, do you see the the wild mNAVs again? Do you see 10x mNAVs? Is that just Bitcoin going parabolic and market sentiment just heading that way? Or are some treasury companies actually worth the premium?
Well, It is not my role to attribute what is the fair premium in the market. What I can say, however, is that what has happened in the past can happen again. I think that there has been, you can say that valuation that has been attributed by the market in the past has been fair at the time that they were attributed, because that's what the market has decided. So, in that respect, capital B mNAV has oscillated between 1.5 and 12. So that's a range of opportunity for investors that have the capacity to access an mNAV in the low range of those historical mNAVs. At the same time, there are some factors that indicate on one side that over time mNAV may compress as Bitcoin supply is finite, and that as it is harder and harder for Bitcoin treasury companies to generate significant BTC yield as they grow, because the more the Bitcoin on the balance sheet, the lower the type of increase of Bitcoin per share as well, typically.
Right.
That is why, as well, of course, capital B has the advantage of being of a size that allows for significant upwards movement, even on the Bitcoin per share side, because of both the side and what the mNAV can do to reflect that future growth potential in an early stage company. And that as well, there is another side of things which would, on the other side, say that we have not at all seen the all-time highs of mNAVs as well, compared with the traditional PE ratios that we can observe in the market, that can be much higher if Bitcoin is more recognized within the traditional financial system as a typical asset, and if the Bitcoin treasury company business model is also integrated much more within traditional framework of analysis. And so, in that respect, I see a future where you have the leading Bitcoin treasury companies in their respective regions that accumulate a level of trust, a level of confidence from market participants in their capacity to generate more Bitcoin per share in dilution minimized ways, in the sense that those companies could at some point as well gain a form of monetization. So, for example, the Magnificent Seven are not only bought by market participants because Google has developed a new research mode or has developed a new type of AI bot. No. At some point, you gain a form of digital monopoly, and that digital monopoly is seen as for market participants as the best way to store their wealth. And a Bitcoin treasury company that succeeds in its region becomes as well a form of digital monopoly. It is just not a digital application in internet monopoly. It is not just a digital social network monopoly. It is not a digital phone monopoly. It is a digital capital monopoly. And so, in that respect, I do see a world in which leading Bitcoin treasury companies that gain a certain form of leadership in their region are able to consolidate the type of market expectation for growth in their respective regions, and where size translates into more capacity to generate more growth for shareholders on a Bitcoin standard, because that balance sheet reaches certain sizes that reach as well a form of escape velocity, in the sense of both the growth of Bitcoin itself, in the sense of the size of the capital markets that are accessible, and in the sense of the other types of products that those companies could launch.
So I'm on the bitcointreasuries.net website. The mNAV basic is slightly under 1. It's at 0.874. That's basic. Diluted is at 1.5. So would there be any point that you would defend, as they say, the mNAV? Do you have any tools available to you to do so? And if so, how would you execute some of these tools to try to defend? For example, some people say, buy back your stock. I know, never sell your Bitcoin. But some people say, sometimes you have to sell your Bitcoin to buy back your shares or to be able to pay obligations. Where do you stand? What have you thought about so far?
Well, there is a tool that's not been mentioned by a lot of market participants, which is called education. So over the month of November, I've discussed, I've presented and spent a lot of time with 70 different investors, brokers, investment banks, the largest asset manager in Europe, that are just starting to grasp what is Bitcoin and how Bitcoin treasury companies like Capital B in Europe are a solution for them. And so that may be a part of the explanation of why we have maintained as well an mNAV around those levels on a diluted basis, which is higher than the typical benchmark. And so that's one. A second, of course, you've seen some companies start to deploy share repurchase programs. That's a possibility. That's a tool that's available under certain conditions to Capital B as well. That is, of course, something that a company can consider. However, that is, in my view, not the first option. And that is not an option to sell Bitcoin to buy back shares. For me, that doesn't make sense. I've had a debate on this with Richard Bayworth. In my view, it doesn't make sense to sell Bitcoin to buy shares. To buy shares is potentially a tool, yes, but with which types of proceeds? That is the question. When you sell Bitcoin, the only certainty you have is that you have lost a certain number of Bitcoin that you may never see again. And the other side of the trade is that you buy shares, but you have lost Bitcoin. So in fact, the market could go down by 20% the day after, and you have wasted capital. So I'm not in the business of wasting capital. And that is not a tool that I consider very sound. Having that option as an operational company is still, of course, powerful, but I don't consider that as valuable for a Bitcoin treasury company. What I consider valuable for a Bitcoin treasury company is education, is new types of investors that come in at an embedded premium within a new type of financial instrument that you can issue, like the Bitcoin convertible bond, or another one. And of course, the repurchase program of shares that you can have. But you have a lot of options in the market if that is the most important aspect. If you have built an operational reserve that allows you to have that time to select the right operations to do for your shareholders. And that is what we have focused on, is to make sure that we build that reserve over time as we raise capital and we plan for the future. So in our last half-year result, we have announced that we had operating cost of the Bitcoin treasury company of about 1.2 million over one semester, and a reserve of 4.5 million euros and 59 BTC. So that's a reserve of about 7 to 10 million euros compared with Bitcoin treasury company costs of 1.2 million a semester. So you see that the company is planning for the future. And then there are other things that a company can develop. You have seen Metaplanet
Hmm.
develop new types of Bitcoin income generation products with a very minimal part of the Bitcoin they raise. That's interesting. It's not been our focus, but that's of course interesting. It's a respectable and leading player. Strategy has recently also mentioned that they are looking at systemic bank offerings that can be provided. At the same time, the real value that is provided by a Bitcoin treasury company is the issuance of instruments with limited to no dilution or minimized dilution that allow for the growth of Bitcoin per share with a conservative approach to running the business. And that is the best service you can do to shareholders.
So, based on that answer, I'd be kind of curious to see if you can, and I understand if you can't, but I would be very interested to see what your perspective is on Sequans and how they've handled some of these recent actions.
Well, you do not sell your Bitcoin. That's the key headline. Is you do not sell your Bitcoin, and you also provide clarity to your shareholders. Look, I am not giving a lesson to Sequence. It's a respectable company that's been in business for many years in their respective sector, and they have tried to launch a Bitcoin treasury, and that is a positive for Bitcoin. And I guess that they have had potentially to separate themselves from some Bitcoin. They still have some Bitcoin. I think I've not seen long form explanations on why, so I would remove myself from making statements without that information. I think it's an operational company that has decided to raise capital to accumulate Bitcoin. That was a good decision, and then it seems like they had to sell Bitcoin, and I would respect that business decision, even if
Yeah.
that is away from what is Bitcoin treasury company strategy. And I would say that this is also showing the example of focusing on long-term to perpetual type instruments instead of shorter-term ones.
Yeah. Well, plus, here's one thing that I think a lot of people don't really think about. There are Bitcoin treasury companies and companies with a Bitcoin treasury. And
Agree.
I think that could be a clear distinction that we're starting to branch out. I don't know if you can rapid fire these, but it's I've heard you mention two things that were really interesting to me about Capital B: treasury as a service and the possibility of maybe acquisitions or partnerships. Quickly.
Sure. So it is not in our business strategy to focus on M&A, but we do have some opportunities in terms of consolidation that we are looking at. This is, of course, important for the company because that could allow the company to increase significantly the number of Bitcoin on the balance sheet. Nothing is certain. At the same time, if you have a specific opportunity with a specific alignment and a specific potential efficiency in the process and joint alignment, I guess that it is worth studying very carefully the opportunity. At the same time, that shouldn't be a distraction from the main objective, which is to issue digital credit in the most conservative and efficient way for Bitcoin per share. So yes, we are looking at this. There are other types of alliances that we have in our zone of opportunity, especially in the Middle East. That I cannot really comment more on that, but that is really something that's very exciting because you have a lot of Bitcoin native players in the industry and in the Middle East that are quiet but extremely significant in the space and with whom we have significant relationships. So I think that that could provide major opportunities. There is, of course, as well, the opportunity for international expansion and distribution of the share and of the types of instrument that we can issue. And that includes, of course, Luxembourg, that includes Abu Dhabi, that includes, of course, the US overall. And so that we are very focused on as well. That we think that's very important for the accessibility of the share overall and its liquidity. And on the other side, you mentioned another question. The first one, sorry.
It was the Treasury as a service.
Oh yeah, of course.
Yeah.
So I think that's related to some of the alliances discussions, and there are some players in the world that have a lot of Bitcoin, a lot, thousands of Bitcoin, and those players are not necessarily listed in public markets, and those players may want to gain some exposure to listed markets. And Capital B is uniquely positioned with the instrument I mentioned, the Bitcoin denominated convertible bonds, that are uniquely structured with a bankruptcy remote structure in Luxembourg, and potentially in the future in other sides of the world, that can provide a form of outsized risk return profile for investors that are aligned with the long-term vision of Capital B, and at the time maximize both at the same time the size of the balance sheet of Capital B and its BTC yield generation. So that is really a quite unique opportunity for Capital
Yeah.
B to have
It's
both
very interesting and very
opportunities
unique.
on the long term, for the balance sheet and the BTC yield, of course, generation, and as well on the shorter term with many types of opportunities that we are focused on to develop. So
This
working
is
a lot
great.
with that.
I have three questions from just people that
Yeah.
I reached out to or they commented. I'm gonna try to I'm gonna ask these quick and feel free to answer it as quickly as you'd want. I know that your time is
Mhm.
valuable. So the first question is interesting because it's about Bitcoin Core version 30 versus NOTs. I'm not sure if you're too familiar with the situation. A lot of companies aren't really commenting on this, so I'm kind of curious to see what your take is. So the question is, has the company studied the risks of Core version 30 or directed their custodians to study the risk and take steps to prevent harm to Bitcoin's use case as sound money?
So that question is necessarily up for debate, and I think it's been very good that there has been and there is still a debate. Um, uh, in that specific topic, I very much align with the perspectives of Adam Back, which are, by the way, very much nuanced compared with some of the detractors would like to say. What I understand from Adam and from everything I've read so far is that you cannot, in a censorship resistant sound money, prevent some spam in the Bitcoin blockchain, and that in that respect, the spam providers find different ways to include spam in the Bitcoin blockchain. The most important thing is that nobody is able to consensually define spam.
Yeah,
So
it's a very difficult one.
that is the core issue of the proponents on the Knot side. I fully understand why, because they rightly believe that Bitcoin is first and foremost and uniquely sound money. And in that respect, they justifiably want to retain the capacity of filtering what they deem as spam. The issue is, to date, I understand that Nuts is really depending on one or very few contributors. I would say a much lower number of contributors than Bitcoin Core. And I would even say that one individual has a lot of influence. And in that respect, I would say that is less, in general, it's a gut feeling, but in general, that feels less secure and less decentralized. And on the other side, I also hear that there is some impacts of those proposals of additional filters that would also hit and hinder some sound money applications on top of Bitcoin. And so, in
Yeah.
that respect, those two elements would tell me that it's the typical situation where first, two sides agree on the objective, which is that Bitcoin becomes the sound money for the world. And so that's a positive thing. The two parties engage in uh, a good debate that is necessary for the health of the network.
Hmm.
There is a party that says, guys, there is a problem. We don't like spam and we would like to filter things. And here is our solution. And there is the other party that says, guys, we appreciate your concern. In fact, we have the same, but it seems like your solution is providing new types of problems that are worse than the issue that we are trying to solve for. And the
Yeah.
additional problems is additional security and decentralization risk because you rely on one specific individual or a very short number of people. And second, that the solution could create issues for the very use case of sound money. And so, in that respect, a proposal I've seen that is quite interesting from Adam is to say there is maybe a question on the size of the increase of the capacity, and at the very least, on the type of treatment that's been made of the people that were disagreeing. Because I've seen valuable feedback from market participants that said, "Oh, but we were not listened, and we were even not censored, but blocked from certain
Certain
network
forums.
forums." And I think that that is a concern that needs to be addressed potentially. But as well, those type of issues are necessarily going to happen in a decentralized, ungovernable network.
Yeah, I agree.
And so, if the question is what capital B will do in that respect, I would say that this specifically is not the role of capital B. What we have done, however, is to provide more education on the topic. So we have discussed this at length with a few people in invitations to our podcast, Capital B Talks. Adam Back has joined and discussed his perspective, and Stefan Nivera has come and discussed this topic. And probably in the future we'll have someone on slightly on the other side, probably.
It's obvious that you spend a lot of time going through and researching this because that answer is very thoughtful. And I think most people would find that valuable because it's not an easy topic. I'm going to rush these two because I think they're important. A capital B US ticker symbol. Are they coming soon or?
It is not in our hands at this moment. We have done all the different steps that were needed for this. At the same time, we are waiting for FINRA, the US authority that is competent to provide the final approval. And we are waiting for their feedback. So I guess that there has been some delay with the US shutdowns, and there could be some delay related to the MSCI consultation, but that I don't know. Huh? It's something that we
Yeah,
don't know of, and
at
so
least it's in the
we have
process
to,
and you're,
we
yeah,
have to
it's
follow
just a
the
matter.
process and wait for the US authorities. And we will, of course, be as fast as possible in any additional demand that the US authorities would have from us. But we diligently follow the process. So as fast as possible on our side. And I'm sorry for the delay that has caused.
The last question was from the same, the first commenter. If both the leverage Bitcoin acquisition model and the provide products and services to stack sats model are equally viable, how should a company think about deciding which path to pursue? So Bitcoin acquisition model versus the provide products and services to stack models.
It is inevitable that over time, a Bitcoin treasury company will have both a balance sheet and a P&L. Today, a Bitcoin treasury company that has a major success and is able to consolidate its leadership has the most opportunity to develop on its balance sheet. At some point, if you take a hyper Bitcoinized future, the companies with the most balance sheet will be able to build the best P&Ls.
That's true.
Some companies have started to explore possibilities on that front, and we are just at the very beginnings of it. And so at Capital B, we will be extra careful about those things. And in fact, I think we've distinguished as one of the most careful because the biggest as Michael says, your worst enemy is to pursue your good idea at the expense of your great idea. The great
Absolutely.
idea is to build the biggest, largest, most solid, most pristine balance sheet on Earth, on your continent, on your region, and to maximize the number of Bitcoin per share for your shareholders by issuing digital equity and digital credit with the power of your balance sheet in Bitcoin. And over time, the power of that balance sheet in Bitcoin will also open new opportunities for the opportunity to stack more sats in a non-dilutive way with P&L type activities. At the same time, it doesn't have to be a distraction, it needs to be an addition.
I agree. Is Bitcoin per share still the ultimate metric?
That is my North Star every day. It is the North Star, the South Star, the East Star, the West Star. It is everywhere in my eyes all the day. So,
Okay, I love hearing that. Okay, do you have any questions for the public or any questions for me or anybody? I mean, anything that you'd like the
uh,
retail, just the people to, anything you'd like to know?
yeah, I would like to say, however, and that relates to the discussion, to sell Bitcoin to buy back shares, that I think is the worst idea I've heard over 1 year, is that the objective of maximizing the increase of Bitcoin per share, the BTC yield, is the North Star. This is the ultimate goal within the framework of the long-term accumulation of Bitcoin. So each operation should seek to maximize BTC yield in a way that is within the respect of the first principle that you need to accumulate Bitcoin, and accumulate Bitcoin needs to increase the number of Bitcoin on the balance sheet. And so it is accumulate Bitcoin in a way that maximizes BTC yield. Because you can have market players that say, oh, look, we will provide this yield, but guys, you are
Yeah,
selling Bitcoin. So it's, you need to take those two in mind, and this is literally the mindset and the extension of a Bitcoin maximalist principle into a publicly listed company.
I love it. I love it. Thank you so much. I think I mean, again, I can't thank you enough for spending this time with me, for being so gracious with your time. It really is fantastic. Maybe we could do this one day in Spanish. I think there's not enough
Yeah,
Spanish content out there. I think it would be
my
great.
pleasure. Whenever you
Yeah,
want in Spanish, would be great.
fantastic. That'd be great. Anywhere you want to send people?
Well, you can definitely follow us on X, on LinkedIn. You can reach out to us by writing to me on LinkedIn or on X in private messages, and we will respond to the best that we can. And I will definitely look at any feedback that is provided in the comments. Feel free to tag me if you want me to see something, and I will take it into account. Thank you
All
so
right.
much.
Thank you. Thank you so much. Thank you to Daniela as well. She's fantastic. She was very helpful. She actually followed up with me, which is crazy. So I want to thank you guys. Keep up
It's
the
not
good work.
crazy. You are one of the very valuable contributors on X since the
Thank you.
beginning, and would like to thank you as well as every anonymous account and not anonymous account on X that
Yes,
contributes to us all growing together and building those foundations for a Bitcoin future.
I love it. Thank you so much, Alexander. Have a good one.
Thank you so much. Take care. Bye.
Bye bye.